What's going on, guys? Welcome back to the channel. We have some things to get into here today. Elon Musk cheers on Justice Department probe of short sellers. What the trading irregularities probe means for AMC stock. I think that is also very interesting. We have some drama again going on with Ukraine and Russia that is helping to drive the markets down today. And that's something I do want to highlight, as well as what I expect throughout the rest of this week. And as always, I do want to go over the technical analysis, the Ortex data, the Max Payne, the Stonko tracker data, 13F filings, everything you guys need to know. So if you appreciate that, hit the like button for me, subscribe to the channel, as well as make sure to check out the pinned comment down below if you guys want to join a trading community, as well as links down below in the description to get yourself some free stock, because free money is can't argue with that, right? So let's get into exactly what's going on today. So AMC is down 1.64%. Actually not a terrible day considering what is going on with the markets as well, down about 0.5%. You would typically expect to see AMC down more than 1.7%. But you are not really seeing that. The pace of the sell-off in AMC stock, the closer we get to those lower levels, is starting to decrease. And that's very important to point out, that people tell you in the comment section to sell out. AMC's going to zero, AMC's going to $10. Sure. Could it go to $10? Could it go to $8 if you've seen a March of 2020 crash? Sure. Is that going to happen? Probably not. Are we going to stay at those levels? Probably not. If you watch this channel and you follow this channel, you know why to be bullish on AMC. And that's really all I'm going to say on that one. Because if you know, you know. If you don't do the due diligence, then you don't know, and you're going to be a little bit fearful. Those of you guys that do, you are not worried whatsoever. But let's talk about this for a second. It says, what the trading irregularities probe means for AMC stock. And we're going to skip all the way down to what it means for AMC stock. It says the lack of transparency in the stock market is a topic that has great importance for AMC stock and its shareholders. The concern that AMC is being harmed by irregularities from short selling hedge funds is a consensus among the AMC ape community on Reddit. The report that authorities are putting bankers and hedge funds under scrutiny may serve as a positive for AMC shares, as it shows that investors' claims have not been in vain and that individuals have had a say in the markets. Until the irregularities have affected AMC's, until the irregularities that have affected AMC's performance have been corrected by authorities, the stock should continue to trade primarily according to the sentiment of its stockholders. This may be even more positive as the investigation progresses. So definitely some positive things to say right there, and just highlights, more of what we've been saying, that actually is going to have an influence on the price of the stock, and is a very, very bullish thing. Now, as far as the whole Russia-Ukraine situation, some very interesting things are coming out. So 4 months ago, Ukraine has given new warning by U.S. of imminent Russian attack. The United States has issued a new warning to the Ukrainian government that the latest intelligence points to a full-scale Russian invasion imminently, according to Ukrainian, U.S., and Western officials familiar with the matter. I do want to point out, this has been said many times, and that is not new information, but the markets, they act like it is a new thing every single time they hear about it. So yeah, I'm sure the markets are selling off right now. Let's see. Actually, they're not. They're not selling off this time, so that's very interesting. But they do act like it's new information every single time. Here is the big one. You do see that there is a European Council chief calls for emergency summit on Ukraine to be held next Thursday, as well as that Ukraine is dealing with a cyber attack on its website. So it looks like Russia is going to invade Ukraine probably sooner rather than later, because they know we have more military equipment on the way to Ukraine, and it's going to make their job a lot harder trying to take Ukraine with the more and more equipment that we send over there. So that's something very interesting from a more strategic point of view. It makes sense to take it sooner rather than later, and do expect a knee-jerk reaction in the markets. Expect a 2 to 4% down day, expect a 5 or 10% down day in AMC. Be prepared for that, because you're going to freak out the markets when that actually does happen. Expect oil to go up, expect gold to go up, because that's exactly what is going to happen. You're seeing that really happening today as well. But the more headlines we get, it does seem to be the bigger sell-off that we do get, which we have already fallen a lot today. We were positive when we opened, and it's been a pretty much straight sell-off, down about 7 points. So we're seeing these wide ranges really back and forth on the SPY. So definitely approaching those lower levels at 420 as well. As far as the data that you guys need to know, this is another very important key thing. Keep a watch on this for your guys' self as well. Fed Rate Monitor Tool Investing.com. You can see for March 16th, that is obviously 3 weeks away, 1 hour and 23 minutes. They like to get very specific with it, but you're only seeing the markets pricing in a 50% rate hike by about 27.9% of market participants. 72.1% of market participants are expecting a 0.25% rate hike. Depending on what happens with this Russia situation, there's a lot of talk that the Fed might have to work more aggressively to raise rates faster, because that will make the price of oil go up. That will make the inflation readings look that much worse. So when this starts to flip to maybe a 0.5% again, that's when you could expect a double whammy of fear from the Fed as well as Russia and Ukraine coming all at the same time, and that could be key. But I do also want to point out the markets, they're not going to drop like we've seen in 2020. Based off of what we have going on right now. You need a systemic problem, an underlying fundamental issue to see the markets dropping that much. So be mindful of the kind of positions you guys are putting on. If you're hoping for another 20 to 30% downside in the SPY, it's simply not going to happen because Russia is invading Ukraine. The Fed could do that, but that is still, in my opinion, about 6 months away at the very minimum before we see a crash on that level. As far as the data that you guys need to know and the economic data that is coming out on Thursday. So basically tomorrow, you are seeing the GDP growth rate quarter over quarter, GDP price index, Chicago Fed National Activity Index, initial jobless claims, PCE prices quarter over quarter, core PCE prices, real consumer spending quarter over quarter, and this all comes out at 8:30 a.m. tomorrow. So we're going to get hit with a lot of data points, all of these data points, literally at 8:30 a.m. So by the time you guys wake up, the markets are going to be reacting to all of this, and PCE is probably the most important thing here, as well as the GDP growth rate quarter over quarter, because those are the two things that the Fed really pays attention to. Initial jobless claims as well, but that's not expected to come in high because it's just not. There's a lot of people working out there. Unemployment rate is really low. So if the PCE numbers come in very high, then that could definitely move the rate hike expectations, and that could drop the markets or make the markets more bullish. We'll just have to wait and see when that does come out. As far as the specific data on AMC, let's take a look at the option flow sentiment. So 9% positive, 40 orders today, totaling $8.48 million. This is because of the fear that is in the markets. Simply put, nothing else. And typically when there's a lot of fear in the markets, that's when you want to be buying stocks. The call to put ratio is about 80%. So what that means is only about 1 in 5 investors right now are bullish on the markets. And historically, whenever you get to those crazy high call or put to call ratios, you want to be buying stocks. Now, I'm not a fan of buying some stocks, but like Square, PayPal, AMC, DraftKings, SoFi, stocks that are down a lot, that's where the opportunity comes in. And you want to buy when others are fearful and sell when others are greedy. Probably the most famous quote from Warren Buffett. So I did want to put that little golden nugget in there. As far as the short interest of free float, 20.84%. So very high. It's really not moving around all too much. We do have current shares that are sold short of 106.98 million. Cost to borrow max of 1.9%. That's very interesting. That is coming down just a little bit. The share utilization is staying the same. And that's what I want to see, that relationship between the utilization and the cost to borrow max. Say the cost to borrow max went to 30%. I want to see, does the utilization come down? Are the institutions that own AMC lending out their stock for 30%, or are they not? Do they think it'll go higher than 30%? That's what it's telling you. And 1.9% cost to borrow max, that's a joke. Nobody's going to lend out their stock for that, for 1.9%, and that's exactly what you're seeing. Days to cover at 2.31%, so also looking very good. As far as the 13F filings, you are seeing some very interesting things going on right here. An increase of 414% to that position, a new 169,000 share position right there, another 39,000 share position right there. JP Morgan small cap index did increase their position by 130%. Advanced series trust increased their position by about 80%, bringing their total to 128,000 shares. A lot of bullish activity across the board going on with AMC stock. And like we went over in the last video, the California Pension Fund increased their position by 4x, going from 105,000 shares to 620,000 shares in the last quarter. So obviously, why are they buying the stock? Because it's at its fundamental valuation. If you get a short squeeze on top of that, that's icing on the cake or the cherry on top. So that's the way that I look at that, and it is looking very good at this current moment. As far as the max pain, that is sitting at, let's give this a refresher. I think it just tick down? Yeah, $18. It just ticked down. When I started this video and had this pulled up, it was $19. Now it says $18. So that is also very interesting right there. In the Stocko tracker data, we are seeing 3,000 calls that are in the money, 134,000 calls that are out of the money. If we do see a bounce by the end of the week, if the markets do slow down, the PCE, the data numbers are good, and that could give us a reason to rally, AMC is also likely to rally. We're not seeing a large amount of calls on this expiration, but you are seeing a very low ratio between calls that are in the money compared to out of the money. Like I said, 3,000 that are in the money, 134,000 that are out of the money, almost 135,000. For puts that are in the money, 29,000. Puts that are out of the money, 32,000. So based on this ratio, it looks like we could see a move up if the markets do turn to the bullish side. As far as AMC specifically, the technical analysis, like I've had this line drawn up for I don't know, the past couple of days, it's sitting at, let's go ahead, I gotta pull it out, it's so close to the price right now, $16.23 per share. So if we can close above that, that's really going to be looking good, and that's a level that I want to stay above. If not, we're going back down to that $15 price flat, and it's going to depend what happens with Russia and Ukraine. Keep that in mind. There's nothing specifically going on that's wrong with AMC right now. It's just the fear that is setting in. Time in the markets beats timing the markets. We know we have earnings coming on March 1st, and we know that there's a lot of fear in the market. So it is possible to get that next leg up of the MOAS starting on earnings because the stock market is down. There's less liquidity in the system. So the small shorts, they might be forced to cover if the price of the stock, let's say, went up 50% after earnings. So keep that in mind. Very important to point out all of this information to you guys. The MACD is starting to curl to the bearish side. Volume for the day is only at 16 million. Bollinger Bands, we are slightly under the 20-day simple moving average, which is this blue line right here, and that's sitting at $16.91 per share. So if we can see a rally by the end of the day, that would be ideal to break above that 20-day simple moving average. If not, I don't care which way it goes. I'm in there like swimmer, regardless of who else is. I know the due diligence here. I am not panicked. I'm not freaking out. I love what I see, baby. So hit the like button for me. Subscribe to the channel. Comment down below if there's anything else you guys want me to talk about, or something I didn't talk about here in this video. But nevertheless, check out the pinned comment down below. Join a great trading community. Get yourself some free stocks. Link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.